shooting ourselves in the foot. We're shooting ourselves in the arm. I mean, we keep doing these things, and so the rest of the world says, well, what are we going to do now? And so they drive themselves together. We're driving the Russians to the Chinese and vice versa. We're driving the Iranians into the arms of the Russians and the Chinese. All these people are saying, well, what are we going to do? We don't have any choice.
Right.
So they're trying to find, and they are finding ways to get around the U.S. dollar, the U.S. banking system, and the U.S. It's not good for us. This is not good. No, no, no.
I'm glad that you bring that up because it leads very well to my next question. Now, last time that you were here and you spoke with us, not here, but we spoke, was back in June. And at that time, you were very bullish on Russia and arguably, you know, Russian assets. They've cheapened with the ruble's decline. So do you see this as an opportunity?
Well, that's a very good question. I should watch RTTV to find out. How do I know?
There you go.
You know, you're the Russians, or the Russian-oriented people. I did buy Russian shares back in March. I was optimistic in June. I have been optimistic. They've gone back down. And as we speak, I'm sitting here thinking about whether I should step in and start buying. You know, they're not down as low as they were when the Crimean situation happened.
Right.
They may be about to break down, but I'm sitting here. If I weren't sitting here with you, Aaron, I'd be trying to figure out what to do about Russian shares and Russian currency.
Interesting. Now,
by the way, just one reason that the ruble is down, all currencies are down. The U.S. dollar has been going up like a rocket for a variety of reasons, and therefore all currencies are down, not just the ruble.
This is very true. Now, I know that you're very bullish on agriculture and that I should definitely leave my job here as a journalist and go get on the tractor, which we love to joke about. But, you know, how do you feel about Russian agriculture?
Well, I'm wildly bullish. You know, I would love. Russian farms are very, very cheap. That you can buy a farm, you can buy a tractor, very cheap. Did you ever learn to drive a tractor? You just take pictures on tractors.
It's on my bucket list. It's on my bucket
list. You're just taking photographs.
Just taking photographs. You got to learn to drive the thing if you want to.
Yeah, you'll be a good journalist. But you could start covering the farm.
Right.
You know, go out to the farm, sit on your tractor, and talk to farmers and give reports. Russian agriculture has a great future. It's vast lands. Fertile lands,
right.
And they haven't been ruined like many other places have been ruined. No, I'm optimistic about Russian agriculture.
Now, Jim, can you talk to me about China? We know that China's growth is slowing. So is this a good thing or a bad thing right now?
It's good for that China's slowing down. They've had a property bubble. They've had too much inflation. They've had too much overheating. So it's always good when you can slow something like that down. Now, people who are suffering don't think it's good.
Right.
But in the big picture, it's good for all of us.
On the subject of China, what do you think about Alibaba? What's your take on that?
Well, if you bought it on the opening, you made a lot. I mean, on the offering, you made a lot of money. Otherwise, you've lost a lot of money. So I did not buy it. I'm not, you know, important enough to get shares on the offering, so I didn't buy it. It may be a sign of the top of the technology market. It looks like it has been. The technology market in the U.S., anyway, has been suffering since.
I'm glad that you bring that up because we actually talk about that a lot, and I agree with you on that we're at the top, or at least very, very close to it.
Gosh, I must be right then.
You must be right. You know a thing or two.
Wow.
Thank you for sharing your knowledge with us. But, you know, let's talk about trophy assets. The Chinese, they're buying up a lot of trophy assets, and it just came out last week. They bought the Waldorf Astoria, and, you know, it kind of reminds me of Japan when they went out and they bought Pebble Beach and these other trophy assets. That was back in the 90s that Japan did that with the golf course. But could these vanity buys be contrary to indicators?
Oh, they very well could be, and that's a good insight on your part. I had the same thought when I saw it. I mean, staggering. Right. Staggering what they paid for the Waldorf Astoria.
2 billion close to it or something like that.
$1.9 billion. I mean, it's unbelievable. I'll never make any money out of it. Something went to his head. It was some guy who did it, and it may be the downfall of that kid and that insurance company. I cannot see how anybody can rationalize what he did.
Now, speaking of bad indicators on this subject, you know, the market breadth, it's waning, and we know that. But, you know, people like Albert Edwards, I want to read you this quote. He said in a tongue-in-cheek type way, "Sell everything and run for your lives." I love that. It sounds like something you might say.
He may well be right. It looks like he is right. The breadth has been terrible. Most stocks are down. Most U.S. stocks are down in 2014. They're not up, whatever the averages are doing. It has not been a good year for most investors in nearly any asset unless you happen to own bonds or the U.S. dollar.
So would you say not only is the bear market coming, the bear market it's obviously not upon us, but in the next
Aaron, I'm not smart enough to know things like that. I'm
This is
telling
what we
you,
look to you for.
watch your show. Watch your show. I know the bear market will come.
Right.
You know, the people in Washington and New York will tell you there'll never be another bear market again. When you hear that, you run for the hills. You run for your life. You know, you call your mother as fast as you can. Say, what do I do? No, you get out as fast as you can, because there's going to be a bear market. The next bear market, Aaron, is going to be much worse than the last one, because the debt has gone through the roof. Debt worldwide, including the U.S., is skyrocketed, and we're all going to have to pay a terrible price for all this money printing and all this debt.
Yes. Now, like you mentioned, you know, stocks, they've dropped 15 to 20%, and, you know, this, the Fed would be back to QE in a heartbeat if this were the case, you know, if they drop 20 to 15%, 15 to 20%. But what about the real economy here? That's what I kind of want to focus on and ask you about. Signs of weakness outside the U.S. could come back here, which we know. So are you concerned at all about that?
Well, first of all, what is going to happen is the market will go down, at which point everybody's going to call the Federal Reserve, and they're going to panic. They're just bureaucrats and academics. They don't know anything. They'll panic. They'll say, okay, we're sorry, we're sorry. They'll either start QE4, or they'll print more money. They'll say, don't worry, we'll print even more money, and they'll try to save the market. The market will have a big rally, and that might even turn into a bubble at that point. The real economy, listen, the people who are getting the money, Aaron, are having a wonderful time.
Right.
And their friends who are getting all this money that's being printed. But the rest of the country and the rest of the world is not having such a good time these days.
Absolutely not. And, you know, Jim, with commodity prices falling, it's kind of this sign of global economic weakness. So what do you think about oil's recent fall? What would that say to you?
Well, it says to me what it says to you. That, you know, for some reason, there's not as much demand. Something is weak somewhere. It also says that a lot of people probably in the Middle East are dumping oil now as fast as they can, because they know they may not, especially those guys, whatever they call it, ISIS, you know, they're probably dumping all they can, because if they get cut off, then they don't have any money anymore. Right. So there's a bit of panic selling, it seems to me, going on, and the demand is not as hot. Europe is slowed, China is slowed, everybody's slowed.
Yeah.
Except maybe some parts of the U.S.
That's interesting. So where do you see the greatest opportunity in the commodity space right now?
Well, agriculture, still farm prices, rice. Buy yourself some rice, buy yourself some sugar. I got some sugar out of your green room.
You put it in your pocket. I love it. You practice what you preach. I love it.
I got myself some of your sugar. It's free, for goodness sakes. I'm not stealing from you. I might steal from you before it's over, but no, right now I've just put some in my pocket. No, some things are still very, very cheap worldwide. But most things should probably be avoided. If I were buying shares, I would buy in Russia or China or Japan, not in the U.S.
Interesting. Japan as well.
But Japan is down 60%, 65% from its all-time high. I know your parents taught you to buy low and sell high. If you call your mother if she didn't teach you that, tell her, Mom, I need some more lessons.